Good.
Right. You're looking forward to today's show, I can tell still.
Man, I really don't know what we're going to talk about, but let's try.
Let's get stuck into it.
Yeah.
Yep. We'll start over in China as we often do. Daily COVID cases were up to another high, 31,000, just under 32,000 for daily cases. And we finally got the much touted RRR cut in China. That dropped about half an hour ago, I think, a bit longer than that. It's been touted all week, as we've been noting, various papers, state news wise, touting that there was going to be an RRR cut. I had a feeling that they might leave it until maybe Sunday night open, Monday morning, but they decided to go today. They cut the reserve requirement ratio by 25 pips, which leaves a weighted average for financial institutions, their reserve requirement of 7.8%. Apparently, it's the cut is going to let loose some 500 billion won, which will now be available for long-term financing. So not really a huge move in the yuan, but Kay noted that yields took off a bit, US yields took off a bit, and the dollar took off a bit minutes before. So obviously someone might have got the nod on that. I'm still not sure why there was such a strong reaction, considering it been touted pretty much all week. But who am I to argue? Again, lower liquidity conditions may have aided that a little bit there. In the meanwhile, dollar yuan can't get through this 718, 719 area. So for the moment, it remains in the box between 710 and those highs, or 710, 712 and those highs. Do you think that's it, Kay, from the PBOC?
Well, it's part of what they're doing, and the government is probably going to inject more money as well. So, no, I think it's just an ongoing process. And as you were saying, COVID cases record highs, so they are not reopening yet. That's going to weigh, and then expectations are that whenever they will reopen, and I think we would have a stronger yuan reaction on initially, but that they are going to inject a bunch of liquidity again, just to make sure that to kickstart the economy. So I think whatever happens, I've got the feeling that we are going first to visit lower levels in the yuan as things are now. The rest is over to the dollar, but we have seen that in the global scheme, where the dollar weakened markedly over the past sessions, probably end of month, and on the back of whatever CPI and FOMC minutes and PPIs and stuff, the dollar CNH, at least the offshore yuan, did not participate in this dollar sell-off. So I think the path of least resistance should still be a bit higher, barring position adjustments here and there. But yeah, if it's just a part of, right? I think it's a part of the global packages that they are putting in place. So whether it's the end, I doubt it, but we will see.
Yeah, I think what this emphasizes, as I was explaining yesterday, is that China, they do flag what they're going to do with policy. It's not often a huge surprise, and we got this news all this week. So if you're trading pairs, one pairs like that, and you hear from officials via state media, you know pretty much it's bang on that something's coming. And there's not that many authorities that do it to that level. Now, we haven't heard of any comments on FX, but do you think they might be in smoothing a bit on the top here ahead of that, or while that they were planning this RRR cut?
No, I think the reaction that we see now is just that it's been well telegraphed, and market probably long dollar CNH, waiting for the event to happen, and then when it happens, you've got a little knee jerk and then a bit of profit taking. I did the same this morning when we went up to 717.5. So and are waiting for it to see if there's any reaction on profit taking to get it back, perhaps up 7.15 towards 7.14, 13 to get back longer again. But no, I think it's just a fact of most of the time when things like that are announced, we see the speculators take profit on the actual move. So it's just again a buy the rumor, sell the fact kind of thing. But sell the fact, we're still trading 7.17, right? It doesn't come off that much.
No, exactly. Over to Japan, and we got some data out, some very strong data out from there. Tokyo CPI, big jump in the core number, up to 3.6% from 3.4%. The headline up also 3.8% to 3.5%. So here we are again, seeing inflation coming through in Japan. Similar story we saw in the main CPI numbers. This obviously the largest city, capital city, seeing growth in inflation there. It's becoming more than a trend now, or rather the trend is becoming entrenched in terms of which direction inflation is going. And this still remains the battle between the market and the Bank of Japan over whether they might start changing their tune. How far can they let inflation go, Kay, before they have to speak up about it?
Well, I think we're slowly going into the Bank of Japan meeting in December. I think that they may drop a few lines there, but Kuroda has been adamant in saying that he's not going to change anything before the end of his tenure. The 10-year yields went up to the limit again. They were probably there again. I may have missed the headline, but they likely will have been on top there again on the bid in the JGBs. Yeah.
Where do you think their red line is? You know, we were speaking about this back in 2020, 2020 when we were speaking about the US and the Fed. You know, what if they get surprised by inflation and we find inflation up at 6-7%? Where's the pain level for the Bank of Japan? You know, if we get into the first quarter and inflation's at 5% and still climbing, does that force their hand?
I think time is more a factor than, of course, if the price goes up above 4-5% and stays there, and they're going to be forced to do something. But time is they really want to buy time. Most of the members say that they think the inflation will fall back in 2023, but then as it's been slower to start to rise in Japan than anywhere else, apparently it might also be slower to come back down. So I don't know. I still think they are trying just to buy time until the end of Kuroda's tenure, and then we may be in for a bit of a shock. But we've got 3 weeks or so to go, or nearly a month to go to the Bank of Japan meeting, and I doubt that in the meantime they will take stock of it and then try to play it down again. But of course, as you say, if it goes higher and higher, they will likely have to do something. But then against that, you have all those stimulus packages that are kicking in, which is going to likely keep inflation under some sort of control, because the companies are going to get sponsored just not to pass on the full price hikes. And in the meantime, we see energy coming off. So it might help them as well. But for the time being, I think they're just trying to buy time,
Yeah, definitely. And that is that will be a factor as well, energy coming off. And the value of the dollar dropping as well, which is sort of a double, wouldn't call it deflationary, but price reducing effect. And that's similar for the pound as well. Oil's coming off and the pound's rising. So that's going to be a help.
Isn't that a bit funny? The UK, is the UK an energy importer? Like a massive energy importer?
Oh yeah, massively. Okay. Yes, that's
we don't
most of our inflation.
We don't produce oil here anymore.
not enough that it makes a difference.
I know, yeah. There were talks with Norway and Canada and stuff.
Yeah, exactly. I mean, we produce enough, but we sell it all. Go figure that one out. We could be self-sufficient on energy, on oil, gas, but apparently we're not, because we like to flog it all instead. Anyway, that's right.
Living where we are, there's enough wind. There's enough wind here to produce wind energy. No.
Yeah, I know. I actually
I've never lived in such a windy place.
I looked into turbines actually, and they cost a fortune, absolute fortune. So you probably won't even get your money back. But anyway, that's a different thing altogether. So anyway, yeah, that Japan CPI there, the core was running at the hottest since 1982. But there was also PPI came in as well. I'm not sure it's on there. Is it on there? Might have come into later on. No, it's not on there. But PPI came in just a touch softer, 1.8% year on year from 2.1% prior. So it's not all going one way in the different inflationary measures there. Bank of England, BOE's man yesterday said that inflation expectations are well above the 2% target, and there's still a UK risk premium reflected in sterling. Not that you'd know it, given where we're trading at the moment, but that's what she thinks anyway. She also urged authorities to do more on domestic pressures, i.e. domestic price pressures, be it government help for bills and so on and so forth. Maybe a little bit of remittance that monetary policy doesn't have the impact so much here in the UK that it does elsewhere on inflation. As we were just talking about, energy inflation is a big part of the UK picture, and monetary policy doesn't do anything to combat that at all. She also said that the market that they communicated that market expectations before the November meeting were too high. Again, that's had the effect of bringing yields lower, putting sterling off its downward trajectory. So that again shows how the effect of central bank talking has on the market and doing the job for them. Something I've been talking about with the Fed, you know, whether they get to 5, 5.25%, 6%, doesn't matter what they talk about. It's what the market does with that, and that helps with the easing and tightening effect of those words in the market. So even though rates may not get that high, if the market thinks they're getting that high, it does the job by tightening conditions for the central banks concerned. Coming over to the ECB, not sees higher interest rates in coming months, sees high inflation still in 2023 and 2024. Now he's unclear whether 3% will be the ECB's terminal rate in the current cycle. Not is a bit of a hawk. He's not drawing any lines on inflation or where he thinks rates may need to go to. ECB Schnabel said incoming data so far suggests that the room for slowing down the pace of interest rate adjustments remains limited. So a pretty small window for slowing down the pace of hikes. Price pressures are unlikely to dissipate quickly, and not yet seeing an actual wage price spiral, that wages can still put upward pressure on inflation. And that is one of the ingredients in the mix for inflation. That's wage prices. The fiscal year all round is going to be pretty big. Germany is big for unions and pay negotiations. They'll all be coming into the pot. The UK is still under lots of strike actions in various different areas, all about pay. So there is maybe the risk for 2023 is not so much what energy is going to do, it's going to be what wages are going to do. And if they really kick off and take off, that's going to be a big pressure for inflation around the globe as well. ECB's Lane said long-term inflation expectations appear well anchored. Now, what we've had last night and today, or yesterday and today, is some insider chatter from EconoStream, who have a source apparently in the ECB, and this source, or one source yesterday, said that they were almost sure that the December hike will be a 50 pip hike, that many in the governing council fear hiking substantially before a recession, and that a 75 pip hike was not so easy in October. And Lagarde likely senses that there is no clear consensus for a 75 pip hike. Now, that line that a 75 pip hike was not so easy in October is a bit of a strange one, because we got the ECB minutes yesterday in which they stated, one of the lines, that a 75 BP hike was supported by a very large majority. So it's a bit of a counter line to what this so-called insider has said. But also in those minutes, a few members expressed a preference for increasing rates, but only 50 points at the last meeting. And also in the minutes, it said they needed to show equal determination when inflation was above target, countering far too high inflation and preventing it from becoming entrenched, irrespective of a deteriorating outlook, i.e. acting on inflation, hiking, even if it's going to put pressure on the economy. So the minutes there paint a slightly different picture to what this insider is saying. So perhaps we can assume that this insider is a bit of a dove if he's on the governing council. Maybe we need to take it, what they're saying, with a pinch of salt. I checked the rate hike probabilities this morning. So even after that story, and even after another Econostream piece this morning from an insider saying that he sees no realistic scenario where they reduce the balance sheet by much next year. So even after all that, the rate probabilities are actually higher than they were yesterday, up to 99.5% for a 75 pip hike. So seemingly the market is not really taking any notice of this insider. Expectations are still for a 75 pip hike. So again, if they go 50, that will be the surprise. And that's what we need to keep an eye on going into the meeting.
Purely at 75, you have to go against that, right? I mean, they're never going to do 100, are they?
No.
I'm surprised that this much is priced in. Really? Is it like 99% or something?
Yeah, I mean, you can't rely on these things. They can go a bit skewy at times.
Yeah.
But it was running at what, 87, I think, yesterday.
Yeah.
I have to check what I was looking at. 87. I mean, where was it? 80% yesterday for a 75 pip hike. So that's quite a steep jump. So what do you reckon, Stel? Do you reckon they're going to go 75 or 50?
I think probably 75, but I don't think the chances are. I don't think it's done. I would call it not a 50-50, but something like 70-30. So if the market is pricing, I'm going to have a look at the ONIAs, what they're pricing. But if the market's pricing 100% over 75, I mean, I don't think there's any chance of them doing 100, barring some kind of, I don't know what kind of event could cause that. But surely, if 75 is fully priced in, you go against it. That's my gut feeling. But I think they're going to do 75, but I don't think it's a done deal. That's a problem.
Yeah.
I tell you what, man. If Queen Suntan Lagarde has to replace her full suntanning bed park, it's going to be 100 BPs because she's going to set prices rocketing. No, but seriously, you know what? Sometimes those skews can be a bit, how shall I say, mechanical or due to hedging stuff as well, because we have seen the US rates expectations or being very volatile. And people are trading the spread, right, between US and EU yields, and sometimes when the big money managers are hedging their spread bets or just their portfolios, and they feel like, okay, we have to price in a slowing down of the Fed, but then the ECB will continue. That puts a skew on whatever expectations may be for the ECB as well, and I reckon a lot of it has to do with that. Because pricing in 100% is a bit rich. But, my personal feeling is that they could do 75. indeed, but it's still, as Dale says, there's still a fair chance that they could do only 50, right?
Yeah, it's a good point. It's got me thinking that maybe I don't often position ahead of a meeting, just
But
on the meeting.
what's your downside? What's your downside? That's the thing.
That's just what I'm thinking. That's just what I'm thinking now. It could, you know, if they do go at 50, it will be a surprise to the market. Yeah, I think you might be right. I think it might be worth having a look at that into the meeting, see where we are, see what the latest insiders or whatever. You know, I wouldn't do it now. I definitely wouldn't get in anything now. But on the day of the meeting, yeah, I think when we have the flow show that morning, we'll have a look and see if it's worth. See if there's good risk reward in maybe setting something up on the, right side and shorts.
If the 75 BPs is priced at nearly 100% probability, the 50 must be nearly zero. So there's zero risk if you buy the 50 and sell the 75.
Yeah, well, there's always a bit of risk, mate. There's never zero risk in this game.
Yeah, that's true.
You never know, but yeah, we'll have a look at it. We'll have a look at it on the day. You know, until then, there's plenty of water to go under the bridge, and things can change pretty quickly, as we know. Just a quick question there from Surab. China news was not planned. This is not on the economic calendar. No, this sort of thing is just pulled out the air as and when they see fit. But as we've been mentioning, it's been in various Chinese state press articles that they're considering it. So, you know, we all were aware that it was coming. As I said, I thought it might come Sunday night, Monday morning. But no, they decided to drop the ball before the weekend. But this sort of thing isn't on a calendar. It's not an economic event. Some of their other rates, like the NPRs, LPRs, they're scheduled events. But for this one, no, they just do it when they decide to do it. Let's have a look. Yeah, let me know if you get the Ionia stuff still, and we can have a quick look at that. In a bit. On the headline front, that's it really. That's all I've got, unless you guys have picked any juicy gossip out the hat.
Yeah, gossip there is. Well, it's not gossip, but when you say that inflation in Japan is spiraling higher, it's not the case that wage inflation at the Bank of Japan is spiraling higher, because Reuters came out with an article saying that the Bank of Japan executives are only going to get 0.4% of wage increase in 2023. So I reckon that's enough for Corona to go to the middle finger and say, like, I'm not budging. I mean, I'm not getting even close to what I should get, which is 3% or higher. So that was a bit of the gossip overnight, and I found it quite funny when the inflation spikes, they only get 0.4%.
Yeah, well, there you go. And where's he going to end up, do you reckon? Goldies? JP Morgan?
I don't know. Whether it's either Goldman Sachs or drowning in a barrel of sake once he's done.
Maybe we'll get an invite to his leaving do.
I'd love to. He's one of the funniest central bankers we've had in a long while, right? The rest is pretty boring.
Yeah. And RA there with an interesting point on inflation. Inflation problems are supply, not demand sided. Increasing interest rates can clumsily affect demand and make investments to increase supply more risky and expensive. Surely the best way to dampen down inflation is to open labour markets and invest more in supply infrastructure. Are you after a job, a government job there, RA? We all know how it should be done, but there are people apparently who know better than us how to do it. But you know, as far as inflation in the UK goes, it's always been a pretty losing battle for the Bank of England, more so than other central banks. Hence why I think that they'll be seeing rates going higher than they're telling us. But we shall see what happens. Right, so having a look at some of the prices now. As mentioned, $1, me and the K-Man are still in longs in this one. Happy to stay on that side. K's doing a bit more shimmying and slicing and dicing around here. I'm long from lower down, so I'm just sitting back. My last cut was just below 717, so I'm happy at the moment. I'll be looking for a break over that 719, 720, just to maybe take a little bit more off. I'll only be looking to add if we get down maybe to that 709 area, maybe a bit lower. Kay, you're just playing this around really in the middle and just waiting for it to go, aren't you?
No, but yesterday I when those COVID numbers came out, and then the rumors about the RRR, it's I just bought more. So yeah, I'm happy to let a few go around here. We're trading back around 718 in the meantime. So just that I'm you know, in these days, I like to be a bit cautious. I always like to trade stuff around a little bit. When is the most bid? That's when you take a bit of profit and keep the base. And yeah, I mean, yeah, I'm probably a bit more dynamic in trading stuff around. But I'm just making sure that I'm keeping enough for the ride. Yeah. And you know, when you trade stuff around, and we've been talking already about that a lot of times, really. It never hurts your book, right? Your account when you trade stuff around. Okay, there's 100 ways, different ways of trading. But I found that when you start to take like little piece off here, then reload, your overall average just improves, and then your global risk is going down as well. And when you're doing it on a, let's call it a professional basis, or and on the side perhaps some other stuff, it just keeps accounts very happy and ticking along. So that's just the way I'm trading stuff. But I'm keeping enough for the road anyway. Yes, my risk is going down, so I'm happy.
Yes, it's an interesting point. You know, and just to explain for those who may not know, so Kay's in the trade here, and then when it hits highs and things like that, he'll take a piece off, and then if he gets a dip, he'll re-add in, and he does that a bit more dynamically than I would. That's the way he is. I'm a bit different. I like to get in a trade, try and ride it as far as it will go. I'm not averse to adding back into dips and stuff like that, adding back pieces I've cut off, but I tend not to do it as quickly as maybe Kay does. And the main reason for that is that I tried doing that, and I find myself doing too many trades in the middle, and not working out, because you'd load up, and then, you know, and I find I was getting too tight in the trading. So every 10-15 pips I'll be trying to trade it, and then it would all go horribly wrong, because I'll trade too much effectively.
Yeah, I mean, and you should not force it. I mean, and that's the thing. Yeah. Nobody should force the way they trade. If overtrading, and it's actually on my Twitter handle, I like cycling, but that's good for your health. But overtrading is very bad for your health, and you just have to. It's all coming down to levels in the end, but. Like we do trading a bit more on the fundamental side of things as well. It works very well for me, but then I'm coming from a different background as well. I have the habit of doing, I don't know how many hundreds of trades. When you're a spot FX market maker for the best of your career, you just watch everything, and it's just getting being a habit, and that's why I like to trade stuff around, because I've just been doing it for 35 years professionally, and but other people, and Stelios, for instance, has a very good approach as well, because when Stelios is in a trade, even if he's longer term, he still takes very good care of his risk. But then when the trade starts to go, he just doesn't touch it, and he will take the whole trend, as where I might not take the whole trend on the whole amount, but I'm been doing the end of the game may be exactly the same, the result. But for me, it keeps on ticking over my account, and for some reasons I don't have to do it, but it's just working much better for me. So there's a lot of ways of trading, and people and now with that we talk about it, it's perhaps time, because there's not a lot of else to talk about, is that there's a lot of ways of trading, and people should really spend enough time on when they start trading, enough time to find out which kind of trader they are. And it's been done by trial and error, as we say, but it's worth spending a lot of time and knowing the markets that you trade in, because and I respect that. Some people only trade technicals, and they get in and out of positions, which is great. Swing trades, which is great. Scalps, which is great. I can't. I mean, I need to know the fundamentals, and I need to know what's happening in a market or in a currency or what's behind. So there's various ways, but you have to spend time to find out who and what is who you are and what is working better for oneself. And Sarab says, how do you gents move your stop losses with these different style of trading? Because Sarab, we will never have similar stop losses. Some people go stop loss at break even. Other people will start to move their stop losses up deep or down, depending on levels that get broken. There's not one style. We don't move together. Ryan or myself, even if we are in the same trades, our stops might not be at the same levels at all. That's really something that people should try to find out oneself. And the thing is to have a decent stop loss. So there's three different ways, I would say, about stop losses. Either you go, once you're in the money and you had a decent entry and it breaks a certain level that you like, that it should break up or down, you can put your stop at break even. You can either put your stop just behind the level, because if it goes back down, that's where you think it shouldn't be going back down below there or above there. Or you can start to do trading stops, and once the level goes up, if you're long, for instance, and it goes up through the next level, then your stop is with give and take a few pips or so, then your stop is just below that next level. But there are a lot of ways to handle stop losses. Maybe we can talk about that in another.
I can give you a perfect example now. I mean, I'm long this $1, 706.60 something, and 704, and my original stop loss was below the big 7 level, 6.98, so just below the level. I took profit. These were, so 709 was a level we watch on the way down. It's a level I watch on the way up. So when I'm long, this is the point where the price asks the question, can we get above there? So then I started slicing as we got up here. When we got above there, got above the next level, once above here, had this move up, I took some profit, then I started to move my stop up. My stop is now currently at 7.08, so it's below this line here, just because that's a bit of a support area, potential support area now. So I'm going to move my risk up. If I get through this zone here, if we get above 720, we start seeing this zone becoming support, I'll probably bring my stop up again, maybe just below this 7.11 area, this next level, or just below 7.12. It's just a case of stepping up your stop each time. Now, a lot of people I know, they'll get the move and they'll take all the profit. What I try to do with these types of trades, I want to sit in it. I don't like giving up a winning trade unless I'm forced to. So I want to stay in the trade as much as possible, and the big part of doing that is by managing your stop, picking your levels. If you're looking at, if you take profit against that level here at 711 because it was a former level, you've got to respect that for something like your stop loss. So even though you've broken it, you still got to respect it if we come back down. So that's where you start moving your stops, not on the level, below the level. Give yourself a little bit of room, particularly in a pair like this, which can move around a bit. And, if we get through 720, I'll take some profit. If this becomes support up here, I'll move my stop up again. And you just keep it behind a reasonable distance. Maybe you get unlucky and your stop will get hit, but each time your stop is more and more and more in profit, and you're taking more profit on the way up. But the whole point right from the off is not what this is going to do when I'm long. It's where's my stop going to go? I want to get my stop up to break even at the very least as soon as possible. But I don't want that to be restrictive of the trade. I don't want to be trading at 7.08 and I bring my stop up to 7.07. It's too tight. It's too close. There's no conviction that what the price is doing is going higher. So you use the levels for taking profit, then use the same levels for planning your stops, trailing your stops behind. And then it comes to a point, you may get up to a big level, back up at these highs here, and I'm thinking, right, okay, this is a big area now. I'm going to take some more profit off, and I'm really going to tighten the stop up, maybe just below 730, something like that. And then you start bringing it much tighter, protecting what you've got and seeing what it does from there. But as Kay says, lots of ways to skin a cat on that. Stel, what about you, mate? Yeah, I mean, you take a more relaxed, longer term approach, but are you as dynamic with your stuff like stops and things?
What I tend to do, I mean, 90% of my trades are more medium term. I don't scalp, but I do on occasion. You guys have seen me in the chat room. When I do trade something on a much shorter term, my stops are a lot tighter. But when I usually trade with a much longer horizon, my stops are generous to start because let's face it, I'm not the best person to pick bottoms or tops, but I want the trade some room to breathe. But what I do afterwards is I identify key levels that I think are the next hurdles. So, for example, if we take, let me look at. So, for example, if we take silver, okay.
That's great, mate.
Sorry. Yeah. Okay. Hold on. Let me take that. Hold on. So, yeah, I'm long just a tiny bit. So I'm not long at the moment. Let's call it at that. But I will identify a level. So if I was long here, I know big level is around 22 to 22.20. That gets if I'm long and that gets breached and we go to the upside, I will move my stop a little bit below. So in this case, I'll probably move it to 21.75, something like that. So I'll give it a little bit of breathing space, because if it goes above, you can, it's highly likely that it's going to get retested. And when it does get retested, sometimes it doesn't stop there, right? So it goes a little bit below, the markets want to catch out people, take out some longs, take out some shorts. So I will put my stop around 21.75. Then next level is 22.87. So after that, if that gets breached, I will move my stop 20 pips below that, 20 cents below that, or something like that, So I will tend to identify some key levels, and at some of those, I will take out some of my positions. So if I was long here, I would take out, if we get to this near this 22.87 level, I would probably take out a quarter or a third of the position there, and reload if we go back here. I try to dynamically play the position, the trade, but I won't overdo it. So I tend to be a lot more patient, and I tend to let the trade run full size as much as I can. But when I do get to important levels, I will unload some of the position and then try to reload again, similar to what Kate does, but at a much at a more infrequent pace, let's say. So that's what I do. And as I said before, if I'm doing something on a very short-term trade, my stop's going to be really, really tight. So that's the stuff I do. And you said before, you have to, very rightly so, you have to decide what kind of trader you are, and you have to look at the circumstances. So I used to be a market maker, like you guys know. I would do like 100 trades a day, and it was all bam, 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 very quick, hedging straight away, move on to the next one, trade, hedge, move on, trade, hedge, like that. When I left the bank and I came home and I started trading for myself, that's all I knew how to trade. So I started doing a similar thing and just completely crashed and burned, because I didn't have the infrastructure behind me, the information flow. It's hugely important. So I changed the way I trade. It took me a year and a half to become profitable. I blew my first account. Thankfully, it was not big. And try to adapt to the circumstances. That's key. And the other thing I want to say is, if you're trading and you find yourself waking up in the middle of the night looking at markets, or you wake up in the morning, first thing you do is you look at where your position is, you're doing something a little bit wrong. You have to be relaxed. You have to be relaxed about everything. And that's how, when you're relaxed, you make the right decisions. Anyway,
Yeah.
my 2 cents, which are probably worth 1 cent.
There, still.
Sorry?
Extremely good point there, Stelios.
Yeah.
If you're scared, in a way, to say it like in a kind of direct way, if you're scared to lose money, waking up the next day, you should start by doing something else or trade much smaller.
Yeah, exactly.
Yeah.
So that's my that's my 2 cents, probably worth 1 cent because it's Black Friday today, so 50% off.
And inflation.
Yeah, yeah,
and inflation. But yeah, you know, we've talked about you know, quiet times like this. These are the times, and I know we joke about it. This week's been pretty dead. The football's on and whatever. But this is a good time where you can, you know, test your strategies. You can learn to refine what you're doing in markets that are perhaps a bit quieter, that maybe range a bit more. I mean, you know, Paul's just highlighted, you know, $1. He might have looked for shorts at this 718 area. And here we got a pretty much a quadruple top. Now, if I wasn't long, I might be thinking that's worth shorting just on the technical picture there. So this is where you need to put that into action. So if you wanted a short there, you know you're wrong above 719. So pretty tight risk trade there. You don't have to risk a lot if you're wrong. But what you want to see the levels broken. And if you get the levels breaking down at 710, well, if your stop was up here previously, your stop can now be at break even, or just above this area here, or just below this area here, should I say. So now you're in profit. Your fundamental start point for a trade is not profit. It's to manage your risk. It's to get your risk down to zero. If you can get your risk down to zero on every single trade, you're not going to lose money. Doesn't matter if you don't make any money. The first rule of trading is don't lose money. And if you can do that first, well, the upside should take care of itself. And then you need to learn how to manage your profits and really push your profits. And when you get a position that's in your favor, you really need to push it. I see a lot of people getting out of trades far too early because they get their profit. Maybe it's a bit of fear that they're going to give it back, and bang, they take profit, and then it moves on another 100 pips. If you manage your risk first, then you've got a free trade. You can kick back, put your feet up, see what it does thereafter. Right, so let's. I want to talk about DXY quickly. I'll say quickly. Got nothing else to talk about this morning, so let's talk about DXY.
I'll give you the screen.
Yeah, thanks, mate. I don't even know if I've got it on my chart. Such is my hatred for it. Let's have a look. Have I got it on my chart? I'll tell you what, Stel, do you want to, you've got dollar DXY in your chart, and you've got indicators that. So you take it back, mate. So I don't want to put you on the spot too much, but I want to ask a question.
Oh dear Lord. Okay, go on.
Yeah, all right, I'm going to put you on the spot. Okay, now a lot of people do technical analysis on the dollar index. My question is why? Because in my opinion, the dollar index is not a leader, it's a lagger. And it's made up of different FX pairs, different ratios, because it's a basket thing, okay? But if, let's say, the DXY hits that, what's that, the 200 SMA you got there, the blue line?
200 DMA, yeah.
So if that's a support point for DXY, if it hits there, what do? What do you trade? Because unless you're trading DXY futures or a CFD, there is no contract DXY that puts you into any form of currency. So let's say you buy on that 200 moving average, okay? You buy one lot of DXY. It's not giving you, let's say, 100 million, of which 56 million is euro, 10% is pound, you know, so on and so forth. So what is the point of doing technical analysis on the DXY?
But you can trade it, like you said, you know, the CFD. You're trading it as an instrument as opposed to a measure of currency, if you know what I mean. But doesn't matter. The S&P 500 is the collection of a number of stocks. It's the same thing, isn't it? I don't know. I would, as long as it's something that's tradable, and yes, you're right, there's not many ways you can trade this. There is, you can trade the CFD, but if you're in the US, you can't. So it's a little bit tricky as an instrument, but as long as people can trade it, I don't care how it is derived or what it means. It's a chart. It's it's an instrument that people look at and people analyze. And the DXY does trade technically. It's not like it doesn't. I mean, look at this. This has respected this trend line 1, 2, 3, 4, 5 times. Bottom trend line, it's a similar thing. So it's, I don't see a problem trading the DXY if you can directly on a CFD. I don't see a problem trading it.
Yeah, as I say, I'm not saying it's if you've got a CFD in your broker, the DXY, fine, you can trade it like you would anything else. Yeah. It's more the how it's viewed in terms of what happens in currencies. I mean, if it hits, if DXY there hits that 200-day moving average, what's actually happening? Is it if it bounces from there? Is that the DXY bouncing from there, or is that because the euros hit a fresh high, hit some resistance of its own accord? And that's caused the move. Do you see what I mean? I'm just trying to.
Yeah. No, I get it. And it's 50% of the DXY is a euro. So you're right. You could say, why trade DXY? Just trade the euro. Because let's face it, the euro dollar is driving the DXY. I mean, it's very rare that you see DXY moving without the euro dollar moving. Yeah. So, I get your question. I would probably, and I do prefer trading the euro dollar rather than DXY. And you'll probably find that, we are very close to the support here. So I'm guessing the euro dollar is, there you go, see, very close to these highs. So when the DXY gets to 105.35, whatever it is, the euro dollar would go to this 104.80 or something like that. So you might as well short euro dollar if you want to go long the DXY.
Yeah, and listen, I'm not going to be overly dismissive of it because it is a sentiment indicator, so it can tell you, what sort of mood the dollar's in and the market sentiment for the dollar in the main. I think I see far too many people, not that many people on site, you and the others, but I see a lot of people putting maybe far too much emphasis over on the DXY in terms of trading currencies, and I think that's a bit of a misnomer. But I don't knock anyone who uses any sort of instrument or technical analysis. If it works for them, it works for them, and all power to them. Kay, you're awful quiet.
No, I don't dare to say anything anymore.
Let's hear it.
I don't dare to say anything anymore. No, at least okay. I mean, I never had the habit of looking at it. It wasn't even it wasn't really a subject of discussion even when I was market making FX. So I've gone 40 years without looking at a DXY. I'll go another couple of years in the same way. No, to me, the thing, what I don't like when people say, oh, the dollar is going up or the dollar is going down based on the DXY. The DXY is 57% euro dollar. So euro dollar can go up or down. And the DXY will go up or down. But then, as we have seen, dollar yen shot up. Where is the DXY? If you look at 2022, just keep it there, right? So the DXY went up. Let's call it 15. Let's call roughly 15%. All right. The dollar yen went up nearly 50%, or I mean, perhaps a little bit less since then, but went up at least 20 or 30%. If you're trading on dollar yen on the back of DXY, you're never going to make it. That's my personal view. So I prefer to look at each instrument separately because each instrument has its own properties and its own sensibilities. So I'm personally, I've never looked at it and I won't look at it, but I respect people looking at it from a technical point of view. As Stelios says, it is, you can trade it technically if you can trade it on a CFD. And as Simon says, rightfully says, it works because lots of people are looking at the DXY. So I'll respect that, but personally, I won't ever, I've never done it, so I won't ever trade on the back of it. Of like the S&P is also an index, and the Nasdaq and the Dow and whatever, all these indices, but no, not one instrument in those indices has as much weight than the euro dollar, for instance, in a dollar index. So I'd rather, because I'm sometimes trading S&P as well, and I'm looking somewhere, vaguely looking at the DAX right now, but it's a totally different kettle of fish to me, Dixie versus other indices, and well, that's about it.
Yeah, thanks, mate. And yeah, good discussion. And we scroll around to the DXY and its importance now and again. So I've got that off my chest for a few months at least. And cheers, Dale, for pointing out. And you make some very valid and very good points on that to be considered.
You sound surprised. Am I usually not useful?
Hey,
no, still,
you've had your moment for 2022. You can have another one in 2023.
The good thing is that Ryan can ask you here or can ask me here. You can't ask this kind of question on Face, or we would get like literally.
Oh. I might do one day.
You will.
And I'll ask Blake about it, and yeah, we'll be on there about 5 hours, I think. Anyway, great, thank you. Good discussion today, I think. We've had stuff all week from you two guys, so thank you very much for that.
Yeah,
to all you folks,
I just want to reply to Charlie in the Q&A. Charlie had a question about the dollar rand. Dollar ZAR is very volatile today. SARB hiked 75 BPs yesterday. South African inflation was hot on the day before. Any chance of follow through on this squeeze up? Well, I think it's typically what we've seen happening in some of the currencies of late, leaving apart perhaps the Kiwi, because the Kiwi really benefited. But a lot of those central bank rate hikes, we've been trading it ahead of the event, and then once the event has happened, it's been okay. And it's a little bit like we've seen the first reaction on the dollar CNH after the RRR cut. Yes, the hiking rates, yes, the inflation is super hot, but and that's perhaps also time for a discussion another day. And I'd like to have this kind of discussion, because it's not because your CPI is running hot that your currency has to strengthen. And the opposite historically has been true more often than not. But yes, I think a lot of the move has done in dollar ZAR, and the rest is really the dollars. We see a little bit of dollar strength coming back in it, positioning. It's also end of month, so be a bit careful with those kind of moves. If I were you and wonder what's really going to happen to the rand, I'd let end of month go by, Thanksgiving go by, and then see when we wake up next week what's happening on the rand, and we can talk about it next week if you want.
Definitely. Thank you very much, mate. And yeah, thank you very much for coming to the Flow Show this week. Hope we've given you lots of stuff to talk about, lots of insight. Please have a good weekend. Have a good the rest of your day. Hug the ones you love, watch the football, do whatever you want to do, take a chill pill, relax, and I'm sure it's going to get much busier next week. So yeah, have a good one. Thanks, guys. Thanks, everyone. Have a good weekend.
Thanks, mate. Come on, England. Cheers.
Come on, the Lions. Thank you all.